Hello, my name is Alan Foom, and today I'm going to talk about oil and petroleum products in the USA, their storage and an update in November 2021. So here we have a picture of a stock tank farm. So these are large tanks used for storing either crude oil or petroleum products, and they're located in a place called Cushing, Oklahoma, which is the heartland of the US petroleum downstream industry. And we have a little pie chart of the different types of oil products, etc. So that's what I'll be talking a little bit about today, where we are now, where we might be going. So current situation. So this is a chart which I post occasionally, looking at the upstream petroleum industry in the UK. I'm going to talk mainly about downstream, but the upstream sends you the context. So the area chart is the rig count. So these are the active rigs drilling for oil in the USA in the light tight oil basins. Majority of them in the Permian, but you've also got the Bakken, the Eagle Ford, and then other basins. The red chart, the red line, is the frac spread count from Primary Vision Network. That's a fellow called Mark Rossano who posts on YouTube. He's got his own business and he publishes this data. So that's the amount of frac spreads that are active on a weekly basis. And this little drop here is due to the Great Texas Freeze. And the dark blue line is the oil price, WTI, West Texas Intermediate, which is the main crude for the USA. So you can see it was about $70 or thereabouts during pre-COVID normality. Then as the COVID epidemic took hold and the restrictions came in, oil demand plummeted, and with it the oil price. And we had a situation in May 2020 when the oil price actually went negative. This is spot for delivery, not a futures contract, which is the bit that went negative, but it went to virtually zero. Then staged a recovery and has had a more significant recovery since then, and it's now actually higher than pre-COVID times. Now, this has led to political pressure because the price of gasoline has gone up and Americans are very sensitive to the price of gasoline. There's political pressure from Joe Biden to get OPEC to produce more oil, etc. Release oil from stocks to increase supply. The blockage is actually in the refineries, but that does have something to do with it. So let's have a little look first of all at crude storage. So this is crude oil. So the gray area here is the Strategic Petroleum Reserve, which is owned by the US government. I'll come back to that a little bit later. And the colored lines here are the commercial stocks. So Pad 3, which is the Gulf Coast area, Pad 2, which is the Midwest, and Cushing, which is the yellow star here, which is the center of the US refining industry. And then you have other pads, Pad 1 on the Atlantic coast, Pad 4 in the Rocky Mountains, and Pad 5 on the west coast, including Alaska and Hawaii, but they're relatively minor compared to the big two, which is Pad 2 and Pad 3. So Petroleum Products 101, just a few basics about what the different products are. You probably know most of this already, but let's just reiterate it. So you've got gasoline, which is used for motor vehicles, which is about 46%, just under half of US petroleum product consumption. Then you have distillate or diesel fuel, which is used for trucks, trains, ships, heating oil, etc. So that accounts for about 20%. Then you have kerosene type jet fuel, which accounts for about 6%. Now kerosene is not that too dissimilar to diesel in terms of its properties, and what people did during the crisis at the time of COVID was they blended some of the kerosene in with the diesel, with the distillate, to produce, to be able to get rid of it into the commercial market. Then you have propane propylene, which is used for petrochemicals and also heating, garden patio heaters, etc. Yes, king of the hill, propane, etc. Let's just not go there. Then you have residual fuel oil, which is used for tar. Some of that's also used for heating, some of that's used for power generation, and you have all these other products such as lubricants, etc., which come out here. So that's where all the petroleum products are. That's what they are. That's where they go. In terms of product stocks, is the orange and the gray are the crude. So the gray is the SPR. The orange is the commercial oil stocks. And you can see there's a bit of a bulge during the time of COVID and then decline since then. Green is gasoline, sky blue is kerosene, red is diesel or distillate, dark blue is propane propylene, and these are various other products. You've also got pure ethanol, and then unfinished refined products, which are things that are going through the system. So that's the products, that's the crude, and there was a bulge at the time of COVID and decline since then, but It's only a little bit below normal stocks, but again, some commentators have been worrying about it, so that's something to think about. A little bit about different stocks by product type. So 62% is crude, 44% is SPR, 18 commercial. Then you have the key products, so that's gasoline, kerosene, jet fuel, distillate. And then you have all the other products, residual fuel oil, propane, propylene, all the other products, etc., that form this chart of the pie. Now, one key thing to bear in mind, and this is something that Mark Rosano posted about on Twitter, is that some of these products do actually have a shelf life. So gasoline, because it's blended up, tends to degrade after about 6 months, 3 to 6 months. So if you got a couple of jerry cans of gasoline in your garage, you might want to check them where you've actually used them if it's still good to put in your car. Diesel and kerosene, they degrade after about 12 months, so they've got a slightly longer shelf life. Natural gas liquids can last, i.e. propane, butane, etc. They can last for several years. And crude can also degrade once it's out in the open air in stock farms because it's got access to bacteria. Bacteria eat some of the bits of the oil by degradation. So you need to be a little bit careful with that. The SPR is stored in salt caverns, so that's not affected by it as much. In terms of day supply, so these are petroleum stocks. Now, crude got just under 100 days. If you look at commercial crude only, that's about 28 days, 4 weeks. So this bit's made up the SPR, this bit's made up of commercial. In terms of gasoline, jet fuel, and distillate, they're all in a 3 to 4 week range. Again, it's just put through the system, and not quite a just in time, but put through the system on a relatively regular basis. Obviously, if a refinery has a problem, like we had during the time of Hurricane Ida, that tends to get a little bit less than fully, safe. Then the others tend to have slightly longer shelf life. So the key point here is that you got about 3 weeks, 4 weeks of product ready. So it works on a just-in-time system. So a quick look at SPR. Now we have a saying in England, selling the family silver, and the Biden administration has been selling the family oil. So we got here, that's the maximum, that's the mean, and that's the minimum over the time frame 2019 to 2021, so over the last decade or so. Thick blue line is the 2020. So you can see there was a bulge at the time of COVID. Now what had happened was the previous administration had taken relief of excess crude production and put that into SPR to fill it up a bit. Still way below average, but they're a little bit filled up, and then they kind of sold off a little bit after the troubled times had come. After Biden administration come in, once it got authorization from Congress, they're now selling it off. And they've been selling it off quite steadily, and it's significantly below what it had been. Now, SPR was established in 1975 after the 1973 oil crisis to give America a safety cushion in case of oil supply disruptions. So this is a picture of southern Louisiana and southeast Texas. And the oil here is stored in salt caverns, which means that it's kept safely and easy to access. And they can withdraw about 4.5 million barrels of oil a day. So quite a good safety margin, way better than loads of other nations. Talk a little bit about Cushing. So Cushing is this place in Oklahoma. It's the heartland of the American downstream industry, center point of the American pipeline network. And what happened here is, see the maximum capacity here, just under about 78,000 barrels. Correction, 78 million barrels. So you've got 2020, again in the dark blue line, and you can see the bulge. So this is when we had the negative oil. This is when we had the situation where basically the storage is filling up. There was no storage available. Everything went in a difficult place. Then we had withdrawal as some of that crude was taken off from Cushing, mainly into Pad 3 and the SPR, and then it's recovered again. And then since this year, it's been in steady decline and it's coming up towards the minimum. And some commentators have sort of said that there's a worry whether there's going to be enough oil in Cushing. Well, I wouldn't worry too much because Pad 3 is potentially going to come to rescue. Pad 3 is the area south of Cushing along the US Gulf Coast. Again, loads of refineries there, harder than the American oil industry. That's their maximum capacity, quite a lot more than Cushing. and they're coming quite close to the high levels. So that's 2020. So you can see bulged up in midsummer and has been relatively high since then. So the shortage in Cushing, then you can just ship the oil over from pad 3. Everybody's happy. So just to sum up, the US oil demand has largely recovered from the effects of COVID. So this is a diagram called the Florence Nightingale diagram, named after the British nursing pioneer of the 19th century. So effectively what you've got here is a cycle of weeks of the year. The yellow is the average in the last decade, and then the blue is 2020. So you can see COVID hit, boing, decline, not quite up to recovery, and then coming back up again. And the orange is 2021. So you can see it's kind of meandering around the yellow average, not quite that far off normal. But oil supply in the US is recovering more slowly. Still not hit the records we had before COVID. As we saw on the first slide, we're not drilling quite as many wells. Okay, there may be smarter wells in better places, but it's still recovering slowly. Crude oil stocks have declined to keep up with demand. So local situation in Cushing, I don't think it's that serious, but some commentators are a little worried about it. Sell-offs from the SPR. So what happens next? We don't know. Demand continues to grow. Supply is growing, but not growing as keeping up with demand. Short-term energy outlook says that oil prices will remain relatively high. Well, I guess I'm a geologist, so I'm happy about that, but I'm not sure if this ordinary consumer would be. So if you enjoyed this video, please like, subscribe, and I'll see you on the next one.